In today's video, we're discussing why this chart at this point is the most important for you to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the NASDAQ, S&P 500, Bitcoin, Tesla, AMC, GME, and more. It's been all about short squeezes in the last couple of days in the stock markets, but also hyper stonks are starting to get very strong off consolidation. The question is, are the bulls back market wide, or are they only in these sectors? Stay tuned to find out more. Alright everyone, well, as we always like to do on this channel, let's take a look at the heat map for yesterday, and you'll see it was kind of across the board lackluster, to say better words. What was happening though is really the only hyper stonk we have on this chart is of course Tesla, and Tesla was up 2.39%, really going along with what the general broader consensus has been since when we broke past $600, we were going to start moving up hopefully towards that 666 resistance. When we take a look at the indices, it becomes very clear why yesterday was a tale of two markets. Hyper stonks were back, so were squeezes. AMC got close to that $20 mark, and look at this IWM, the Russell 2000, smaller companies were back in phase. Everything else kind of up barely across the board, still good numbers, but 1.87 for the Russell 2000 strong into the close. When we go and have a look at the actual sectors, you'll notice that it was a kind of like a mismatch of a whole bunch of different sectors. Some were doing well. I don't even know if we can really break this down. It was so mismatchy and all over the place. It wasn't the clear direction we've usually been seeing, with usually technology, XLY, those two's out in lead, or of course the trifecta combo, XLF, financials, XLE energy, and XLB materials. Usually those ones have been running along with the others being down. What was clear though was risk was still on across most of the sectors and indices, at least for now. Now, if we're talking about heat maps and we're talking about also earnings currently, Nvidia just had its posted announcement, pretty good. Snowflake did it as well, it was all right. And then we had Salesforce and Costco through the Thursday close session. Make sure you're aware that we still are in earnings season, just the biggest ones have of course happened by now. Now, the question is, why are these hyper stonks moving? And I think this chart, as we've been discussing, really demonstrates why they're moving. Wall Street's rotating back into them after creating base and showing volume. And I think we've been on top of this one on the channel. And the reason why is because so many calls, retail calls that is, because this is of course retail trading options, were expiring. We've talked about this chart quite a few times now over quite a few days. I just think it's really interesting to see how you get that hype and that elevator theory where everyone's talking about getting into stocks or specific stocks, and then all of a sudden it drops off and Wall Street pick it up later on. So I think that's why we're seeing that rotation in there. They're the sectors that got beaten down 50, 60%, including biotech, and both are starting to turn around at this stage. So without further ado, let's get stuck into the technical analysis. We'll start with the US dollar index. Our trend line has been met here on the 8-hour chart. And it looked like coming into the live session yesterday, 1 hour before the New York Open, today it'll be 1.5 hours before again, we basically have a huge movement up into this trend line. Now we expect shorting pressure to come through, and have a look at this. You can see how it's interacting with that zone. This creates day trading opportunities as long as we get a candle like this. Let's say this candle closes as a shooting star and then we start seeing follow on. Could that mean weakness in the US dollar? If it does, what's going to happen? Gold's going to go long, silver's going to go long. Also, stock markets may have risk on. Incredibly important chart for us to be watching, and what a critical level. Support, support, resistance, resistance, and a trend line. Phenomenal stuff there. Let's move over to gold. Gold is consolidating at the exact pullback level that we thought it could come back to, 1888, 1890 zone. Starting to see some buy wicks here on the 4-hour time frame. Check that out. Let's now scroll down to the 2-hour time frame and see how it looks. Again, really nice rejection candles. Let's have a look at the 1 hour. Really nice rejection candles. This is making me think that if we get a closure above this 18 kind of 98 zone, that we could be seeing some more resumption for gold moving forward into the 1930 and 1960 resistances. Of course, US dollar will drive this, and hopefully it continues to come down and it all correlates together. Remember, these markets are more correlated than people think once you start to understand all of the instruments. We'll move over as well to silver. You can see silver's trying to double bottom here, a little bit weaker. This is the 5-minute chart. Let's go out to the 1 hour and have a look right on the support zone. And again, you go out to the 8 hour right on the support zone. Silver's been a bit more fickle, I guess, than gold from the trading perspective. And it's why I generally say follow the gold chart. And then if you want to take the more risky kind of play with the higher percentage moves, then you trade silver. It's kind of like Bitcoin versus Ethereum. If you trade based on Bitcoin technicals, Ethereum's going to move generally in line with that unless you've got like some kind of crazy altcoin season. It's the same thing with silver and gold. So at this point, we're basically on support. Hopefully gold can start turning around and that will push silver higher as well. And I would love to see that because, of course, our eventual aim here is to get towards that 30 level. Let's continue to go through some commodities. We've got here US oil, resistance being met, 66.50, having some problems here. You can see the little long leg dojis or the little dojis here. Indecision at the 66.50 zone. Closure above here, I think, brings in a serious move here for oil. I've got alerts set. I'll be talking about it on the channel. Don't worry, oil guys out there. I got your back. And of course, the eventual goal here is 75, 76 on this chart. It's looking pretty good at this stage. Let's move over to Bitcoin. Now, Bitcoin, disappointing to say the least. This is not the type of thing that you want to see happen. In fact, it's kind of like knocked off this little bit of a trend line here where you were thinking about the inverse head and shoulders, left shoulder, head, right shoulder, and it is failing to go towards the 42.50. That is not good, and I don't like this next low that's coming in through here. I would like to see this thing literally start to find bullish momentum very, very quickly. We need to go back above this high, which is at around 39.5 fairly quickly. Otherwise, we're going to continue to stay in this sideways movement for quite some time. Now, a lot of people are calling like June 10th, June 6th, whatever else dates. It makes sense. We're basically in accumulation after a very serious sell-off in Bitcoin and in cryptocurrencies. All I'm really looking for full resumption of the trend is a 42,500 closure above. That's going to put the base in kind of like a giant double bottom on Bitcoin, and we can resume up. For now, I hope to see this turn around either here or down at around this 36.5 zone, because if it can't, then we could go back all the way back into the 32s and 34s, and a lot of people will not want to go there. Lots of volatility still in this coin, so we'll keep watching it, but it's hour by hour on this one. You have to look at it hour by hour. It's literally not something you can just go in on the daily because the volatility is way too fierce. Let's move over to the stock markets now. AMC, congratulations, guys. You literally got close to the $20, and that's amazing stuff. I think the high was around 19.95. I mean, for me, I'd be done. I'd be like, goodbye. That was awesome. What a run. And phenomenal stuff. Shout out to some of the community that have been trading some of these. They've been loving it. And I love it. I love the 20. I love how easily we melted up there. Look, I didn't really ever think 18 was going to be a problem for it. My kind of thought process was 14, 16, 20. And I guess that's the way it played out. So congratulations to all AMC traders out there. It was a very large move. We've hit the resistance. I do expect selling pressure here. Maybe you guys push it through and you take all the apes all the way to the moon. But at this stage, I do feel like a lot of people will get paper hands and they'll weaken around this point. It's just too good a level. I'd be very, very careful on AMC. But of course, you could be wrong at any point. That's just the way it goes. 240, our first level got hit for, of course, GME. Now we go towards the 280. I think more interest will come in on this one because there's a lot more upside momentum, of course, based on previous history and where it's gotten to. GME is cool. I mean, if you're in it, you're in it. If you're prepared to take the risk, you're prepared to take the risk. 280 is the next level, though, that I'm looking at on the charts. And then after that, of course, you're going towards the 350. So you've got some pretty clear levels to aim for, and you're in the middle of nowhere land at the moment. 240 was just the first resistance. It's not a super strong one. Hopefully, this can continue throughout the next couple of sessions. Let's move over now to Tesla, and Tesla fans will be happy. Check out this daily, guys. Looking a lot better. So we close above the 600. It moves back to the 595. Tests from the top down. A perfect test. Resistance, support again, 200 daily, find support. Tesla's off 619 with a 2.39% close. Like all hyper stonks yesterday, they basically all went up. It didn't matter which one you were in. They all did very, very nicely. And then hopefully we get continuation here back to the 666. So Tesla's looking good. And at this stage, it's setting up for more action towards this point. Do I worry about this 20 daily moving average? I mean, you should, but again, we just have to go with, there's a big gap fill here, or big fill, not gap, but a big fill to the 666, and it does make sense for hype to come back in. And usually when retail gets back in, even if people are pulling out of AMC, where will they put their money? Most likely, they're going to put some of their money into Tesla. It's a hugely powerful retail investment, and retailers will move money into it. I suspect they'll YOLO some options as well, possibly in the next coming weeks. Let's move over to the US 100. So this is trading as of we speak, and we're still having problems with the same zone, 13,750. We knew the support, the resistance, and the resistance would be an issue here. Consolidation here is not a bad thing. It's just basically coiling. The smaller the coil, so the smaller the range it stays in, the stronger the actual market is, because it's resetting its indicators after what was a pretty big move. I mean, we put this in perspective. Over a few days, we moved 6% up. That's pretty decent actually in the markets. So it's consolidating, waiting for more information. We go over to the QQQ. You'll still see here the weekly candles were very strong towards the buy side. You can see the support, you can see the resistance. This is of course the same index. And then we go down to the 2 hour and you'll see the interaction with the zone. Very small candles as we coil between the support and the resistance, waiting for the S&P 500 to give us the go signal. And what's that go signal going to be? Well, it's basically going to be a new high, 42.13 plus. Let's get through that. Yesterday, we theorized we would come back down to the 41.83.84 zone. We certainly did. We came straight down, found buying pressure, and moved on up. Again, this is the zone that buyers need to come back in on. Now, if buyers cannot meet expectations at 41.80 and we close underneath there, what are we doing on a 2 hour chart here? We've created a peak, a trough, a lower peak, and then a lower trough. I would expect actually some selling to come in for day traders, 41.50 next target, and then possibly even 41.25 for day traders through these zones. But at this point, everything's still looking really, really strong. This is the point where buyers are going to come back into the market, and it's the most important chart for us to be watching right now, because once this high is cleared, I expect the US 100 to also, so the NASDAQ to also get through that resistance area, guys, and that's going to push some lots and lots of money into the markets for quite a strong period of growth. Remember, as also in America, if you're not an American, you may not know this, Memorial Day weekend this weekend, Friday, notoriously a positive day as well. So will we have a weak Thursday? Thursdays are nasty days, guys. They're nasty, nasty. So we might have a weak Thursday followed by a Friday green day. And that's the kind of way I'm playing with. I'm thinking about this process. Of course, hyperstonks are what I'm interested in right now, and bio in terms of healthcare. I've talked about that to death on the channel. We'll be going live 1.5 hours before New York Open tonight. Come join us live. It's going to be a massive session. And remember, guys, if you haven't already, come follow us over on the Twitters. I've gotten on the Twitters recently. We've already gone well over 1,000 followers. So I think that's like 700, 800 followers in a week. Thanks to everybody out there. But we'll be posting more regular content here on the Twitters. Come follow us at FX Evolution. Links in the description down below. And we'll see you 1.5 hours before New York Open. Remember to subscribe, smash that like button if you enjoy the video, and have a great day, everyone. Bye for now.